evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for the 31st of October, 2019, which means we are just one day away from the start of November, and that's going to bring us a brand new month. And a Friday on a brand new month brings us the jobs report. So we'll have that data right before the market opens, an hour actually before the market opens on Friday morning. And that could be a big market mover. We have the Fed behind us. We've got a lot of earnings behind us, so we'll be focusing on economics, Fed policy, and other kind of measures like that as we go into November, finish out Friday, and then go into the next week. But again, in today's session or today's video, I want to update us on the bigger picture. Once again, just kind of getting us past the Fed. So Don and I in the videos this week have been discussing volatility, news, earnings, so much going on, and we're at the tail end of that week. Have we moved a whole lot? Not really, at least not in the S&P. Well, we'll talk about that and how the plans, strategies, and of course any type of open positions are performing or being put on. So let's start with the S&P. The Fed cut rates. We knew that. And now what's on the table about the market is, are they going to cut them in December? Maybe not. In fact, probably not. And the market's already looking past what they just did. Markets moved up in advance of the Fed cutting rates. Now they've cut rates. The market got what it wanted. And it's that good comment about buy the rumor that they're going to cut rates. And as Don mentioned in a prior video, sell the fact. They cut rates. And the market is sold off, at least in today's session. As of now, the NASDAQ is down 0.5%, and the Dow was down, really with the Russell, roughly 1%. So not a big move, but I again want to focus your attention on factors outside the equity market, which is, well, we'll start with crude. Crude is trailing with the market. It's down, at least at this point, roughly 1.5%. That's a bigger loss than the broader market, and the key point for crude traders is 54.50. So that's resulted in somewhat of a trend day down, along with the equity market, which is also in somewhat of a trend day down. Let's turn our attention here to risk off markets or defensive markets. We've had this consolidation triangle. These are hourly charts of a comparison in gold. And we've had a little bit of a compression pattern, sideways rectangle in bonds. Both of those markets are giving way to a bullish upside break from support. So we had the bonds played at 129. We had TLT, which we'll see in a moment, play off of its support level. And gold was kind of a 50-50. Wasn't really an edge to take either direction until we got the breakout. And that's what's happening right now. Big trend day up in bonds, big trend day up in gold. Let's take us to the S&P, and we'll go into these individually. So I have these levels as profile levels or volume profile levels for intraday tactics, but what we're talking about here from prior videos is this concept of a repeat pattern. So I'm hedged, I'm bearish, I have put positions on, and I'm recommending long volatility plays or long put plays, be that in-out spreads, vertical spreads, or however else you would like to position into a market that is, again, remaining overbought with weakening bull volume. And that was the case earlier in 2019, midpoint of 2019, and then later on toward the latter part of 2019. So I'm just calling this 1, 2, 3, the fourth time that the market's given us a similar pattern. And we're going to position the same, expect the same, and we're going to sort of not expect that whole this time is different mantra to come out. And that's just basically, what is this time is different? This time is different would be not selling off, not falling, maybe at least at the midpoint or a lower level. That could be 29.40 or 29.11 would be kind of a good sell side target on the broader S&P futures. And the S&P 500, we can just kind of cross check that for levels. We don't see the volume necessarily, but we're looking at the same pattern. Overbought, crazily overbought, wildly overbought, and then the rug gets pulled. So we are positioning for a rug pull, not for the top of the market, not for the reversal into a bear market, not at all, but just for the fourth rug pull, or at least a sell swing that lasts at least a week, if not maybe 2 weeks. And that's going to take us into the midpoint of November. The market achieved roughly, well, right there, 30.50 in the S&P 500. So again, we're calling for a sell swing. And so positioning for that. The strategy is to position into it on the way up, not on the way down. But of course, if the market does fall to these lower levels, you still have other opportunities to get short, get hedged, or play intraday tactics, which could be bear flags or intraday options or different scalp trades or bear opportunities should the market fall and complete these downside targets. Again, roughly in this case 29.50. I would say worst case, or not worst case, but a bear case, takes us to about 29.25. In the NASDAQ, just going through our indices quickly, the key spot is 8,100, and the Dow did not make new all-time highs. It's actually coming down off of 27.2, so that sell swing takes us maybe to 264 or 265 in the Dow. The Russell continues to meander within this trading range. So that spot level or upper resistance, we fell just shy of it, was 1,600. So now it's coming down away from this midpoint pivot, just shy of this upper level. We assume the Russell to fall down to 1,500 or even lower. Again, for your trades, your positions, or your account, we want to position for that defensively, just for a sell swing. Again, not calling for the market to fall, go bear. We're just calling for this is the first example, second example, third example, fourth example. Again, it's all probabilities, not certainties, and that's not a clear, I wish it were a prediction, but just probabilities. For crude, we have the market within this other trading range, falling from the high, pushing under 54.50, which is the midpoint level, possibly filling out the range to about 51. Gold is bullish. We would assume it goes higher, especially if we get the sell swing or the bearish liquidation or the sell event in the equity market. We'd expect gold to push up to 1550. And today might be a catalyst or the start of that move. It's happening on strong bull volume. So we'll be looking for gold to go up, trade that on an intraday basis bullishly, or other components such as GLD would be an ETF that you might trade if you don't want to trade futures. So you would draw the similar trend lines or just trade into this underlying. And of course, you can do options on that as well. I promised you TLT. So it had a support bounce play. I mentioned that earlier, and that was roughly speaking 137 per share. So TLT is getting a violent or volatile, if you will, bullish bounce, V spike bullish bounce on high bull volume. This is comparable to September, and the last time we were at these levels after a steep sell-off. We had a steep sell-off through October, and November looks to be a potentially bullish month for treasuries, or at least TLT. And again, the thesis is if the equity market falls for the next week or week and a half, you'll see treasuries possibly strengthen. You'll also see gold strengthen. That, of course, is the bigger picture. That's the broader perspective. We'll have an interesting session Friday. Don't go to sleep. Don't take off early. We're going to have that jobs report pre-market. We're going to see what happens. That could be a catalyst to reverse all these things. So again, as traders, we aren't predictors. We are planners, and we put the trades on and let the market do either the probability, what should happen, or protect ourselves if something goes wrong. And if something going wrong would be maybe we have a super bullish or a big expansion in the jobs report. Lots and lots of jobs are created. Or it could be the other way. We don't know. So the positions will certainly be based on that, based on bounces in risk off markets, for example, treasuries and gold, and then declines or sell swings in risk on markets, which include stocks and crude oil. As always, be careful and safe. This is Corey Rosenblum with your Theo Nightly video for October 31st, 2019.